Up here. Oh, here's Austin. Good. You actually might have better Chris. Hey, Chris. Hey, Austin.
Hey, I'm just gonna stay on mute a second while I finish up some lunch.
No worries. We're just waiting on some other folks to get here. We're hoping we'll have some full attendance. So, still have 1 minute to spare. Put this. There we go. There he is. Nate, I don't know if you've met Rich.
Yeah, that's fine.
He's my
Leadership of it?
new employee, well, relatively new employee. Hey, Stephanie.
Hey.
There's, I printed some materials if you need them. We have John, Daryl, hopefully they show up. I know John's out there actually. Look at you, right on time. How about, they're in the works, you're right. I'll go there. Should that be required? How long would it be today? And go at the end of the day.
Morning.
Morning, John.
Good morning. Good afternoon.
Yeah.
Oh, good afternoon.
We got a full house, actually. I think Clayton can't make it. Sit wherever you want. I think Clayton's the only, I know he can't make it, but I think. We're grateful to have everyone,
Hi.
Cool. Huh? What'd you bring? No.
I brought a bean salad.
That was,
Red bean.
well, I got 3 beans.
It's like, it's garbanzo
You can
beans,
take
black
minutes, Rich.
beans,
It's not recorded.
It is recorded, but
Transcript.
I'll let you take the minutes after.
some that, Olive Garden, Italian dressing.
Oh, yeah. We'll give
That's
Carol a
terrible.
second. Let's get started.
Sounds really good.
I used to have make healthy choices.
I've heard in copies, John.
Did I
if you
get a
need one.
handful of raisinets? You did, right?
Printed copies?
Yeah. 360.
Figured, you know,
The dog had copies.
and I still have.
Oh, yeah, the dog.
uh,
Awesome. Thank you.
A little bit pulled pork upstairs that I did not bring. My husband's home this weekend.
Thanks.
Made a big batch. And that, I don't know if you saw that at Costco, where there was like a. One of those choppers, you know, where it has the bottom. Had 2 little chopper plates, small.
Maybe just
medium,
for-
and put like slices of onions and smack it down and.
Oh, like
chop.
almost like a mandolin.
Right, almost, so like all of this little chopped stuff,
Yeah.
I didn't do it by hand, I did it in that chopper, you have to smack it really hard, and which gets out some frustration, like. just like-
Store stuff?
Sorry,
Is that at a store?
that chopper, was at Costco
All right, have a good afternoon.
last summer,
Printed,
maybe,
copy.
but you can buy them anywhere, but they're like a little faster than a mandolin, because you can do like, you just slice them into big chunks, and it right dices them right up.
Wow,
It was really
Nice.
easy to make salads,
that looks good.
really good. The recipe had like a homemade dressing with like olive oil and did not put maple syrup. I'm like, I ain't doing it. I'm just grabbing the Italian dressing. And the longer it sits in the fridge for the week, it marinates. So by Friday, it's gonna be better.
Thank you.
I like to meal prep. I don't mind eating the same thing like the 1 week and then changing up the, because then I don't have to think about what I'm eating.
Right, are you making a vegetarian move?
No, oh God, no.
Okay.
I'm married to a hunter. I have pulled pork upstairs. I just can't bring that downstairs. No, I could do that.
Wait, he hunted and shot a hog?
No. We had a smoke off this weekend at
Oh.
the camper with some friends and
that
she
sounds good.
smoked, well, I didn't smoke anything. They smoked a pork shoulder, and so we had smoked pork shoulder and baked beans and homemade mac and cheese, and we eat like kings at the campground.
Why would you ever leave there?
Because apparently I have to come to work, man,
Wow, pretty job.
get jobs,
I'm really hungry, so this discussion isn't torture.
and the fact that I'm eating my lunch.
Well, hopefully it won't be a long meeting, so call the meeting to order at 12:03. Are there any adjustments to the agenda? Hearing none, I don't see anybody online or here for public comment, so go on from that. The only other order of business we have is the approval of committee minutes. I sent those out to everyone a couple days ago, so if someone could move the minutes, that would be great. Yep, great. In a second. Austin, Stephanie,
I can second.
perfect.
Second.
All in favor, say aye.
Aye.
I,
Opposed? Minutes pass, excellent. So I'll hand this off to John. We also sent out the FY 360 report. Stephanie was nice enough to get that up for the whole company as well, which is great. I reviewed it and, all the funds seem to be doing very well, except for, one, which is, kind of the action item for this meeting, but, I won't go into detail on that. I'll let John start off.
Great, Nick, thank you. Hello, everybody. Great to see you all. I think that this is cause for celebration, the FY 360 report, because if you'll notice on page 2, the Vanguard Real Estate Fund is now in the 48th percentile, so it's in the green, which means that we don't have to talk about it. So I think we've talked about the Vanguard Real Estate Fund at every committee meeting that we've been a part of together, so.
I think we should make you tell us why it moved into the green. What was the cause for that change?
Daryl, I'm gonna pretend I didn't hear that.
Yeah.
So, all right, but we do have a fund to talk about, and the one that we have been talking about lately, which is the BlackRock Emerging Markets Fund. And we've talked about the underperformance of this fund for the past couple meetings. It's underperforming from a return as well as a risk perspective. In other words, it's taking, even as it's generating smaller returns, it's generating too much risk for those returns. And we've talked in the past about the fact that this fund has been slow to changes that happened on the Russia portfolio of investments, as well as China. On the Russian side, you may remember that when Russia invaded Ukraine, there was an international divestiture of Russian assets. And this fund was very slow to respond to that. And by the time they did respond to it, the assets were underperforming, and so they took losses. And then similarly, we've also spoken about a regulatory crackdown in China that occurred a couple of years ago. And again, they were slow to respond, while other emerging markets funds were more on the ball. As a result of those two major kind of misses, BlackRock fired the fund manager. And so we've got I won't say an inexperienced, but we've got an unproven fund manager, which FI 360 doesn't like. And we also have this kind of ongoing underperformance of assets on the portfolio. I will say that those factors are offset by the fact that the US dollar has been declining in value relative to foreign currencies. And so as a result of that, or in other words, the strengthening of those currencies against the US dollar, returns have gone positive on this fund. And pretty decently. So I'm looking on page 8 of 24, and you can see that the 1-year return on the BlackRock Emerging Markets Fund is 7.53% versus 14.04% for the median. So it's a decent return, but it's underperforming the median return, and that median return is the emerging markets index. So pretty significant underperformance. And so we've, talked, I think the last meeting, we talked about some of the alternatives. And I am recommending that, we make a move on this fund and we, change the fund to the Dodge and Cox Emerging Markets stock. So according to my recommendation, what we would do if implemented is that we would add the Dodge and Cox Emerging Markets Fund to the menu. And then we would map all of the BlackRock balances into the Dodge and Cox fund, and then we would eliminate the BlackRock fund. And again, if implemented, that would be handled by Daryl. He would make that fund change. And send out notification for it. So if we can turn to the Dodge and Cox, I wanna just talk about some high points on this fund and why I prefer to the BlackRock fund. First of all, I think it's interesting to note, just as a kind of like behind the scenes look at my business and our portfolio. I think that this group was the first group that we talked about the underperformance of the BlackRock Emerging Markets Fund. And I think that of the retirement plans that I manage, I think it's probably held by about 20 plans. And I would say about maybe 6 weeks ago, I started moving those plans away from the BlackRock fund. So we were the first to discuss it. You're not the last to be moved, but I just want to say that I think it's it's a compliment to the kind of the thoughtfulness of this committee that we were kind of talking about this thing, and then and now here we are in a position to make a change. So on the 1-page analysis page, this is Morningstar research. You may remember that along with FI 360, Morningstar is really kind of the cornerstone research that we like at NFP. It's independent research. So they're not paid by any of the companies that they cover. And this 1-page analysis really gives kind of, I think, all the breakdown you need to make a decision. I look at a couple things in particular. First of all, I read the Morningstar take, that narrative at the bottom. I won't take your time to do that. You can. It's a very positive take. This fund, you may notice, it was founded in 2021, 2022, which is not a terribly long track record. However, that is kind of overcome by the fact that Dodge and Cox is a very well-established fund family. They're headquartered in San Francisco. And they have been following all the funds that comprise this fund in other Dodge and Cox investment vehicles for many years, you know, beyond the 4-year look back that we have on this fund. So these guys are a well-established firm, and the companies that they're following that comprise this fund are very well-established in terms of Dodge and Cox following them. So that gives me comfort that this what appears to be a short experience time horizon on this fund. It's kind of it is what's the word I'm looking for? It's like the complexion. It's a surface level appearance. So on the upper right of this chart, just below those line graphs, you see those boxes with the 4, you know, quadrants in it. Those are quartile performance. So basically, for the past 4 years, this fund has performed either in the top quartile or the 3rd quartile, just from a straight return perspective. If you look under where it says history and the shading just below those quartile boxes, on the right you see it's 825. That's the year-to-date return as of 825, and 2 lines down you see the total return percentage. It's 24.48%. That's compared to, on the BlackRock fund, for the same time period, 7.53%. So it's tripling the performance. And so, you know, doing a very good job. Morningstar rates it a silver. I'm now on the upper left of this page. The Morningstar medalist rating. I think about a quarter of Morningstar funds receive some medalist rating, so that's significant in terms of how Morningstar differentiates funds. Under the historic profile to the left of that Morningstar medalist rating, it's a 4-star fund. That's out of a 5-star rating. So it is that's worthy of mention. A 4-star fund rating from Morningstar is very high. If you look on about a third of the way down the page, all the way to the right, you'll see the portfolio analysis. And most of those names, heck, I don't recognize. And so they're not household names. Names that we may recognize are Taiwan Semiconductor is the top holding. Certainly Walmart, Mexico, Samsung, Tencent is a common name, Alibaba. But importantly, to the far right, under percentage of assets, no one fund is making up a super outsized portion of the whole. I think a 7% interest in Taiwan Semi is significant, but I've seen emerging markets funds, and Taiwan Semi is a cornerstone of most emerging markets funds, and I've seen Taiwan Semi comprise up to 12% of an emerging markets fund. So that's where over 10% is kind of where I think, well, we have to take a look at that. Finally, I'll say that I don't have the printout with me, but I can tell you that we ran an FI 360 report just on the fund itself to see how it would score, and it came out with a dark green quartile box and a 0 score, meaning it is a top, if not the top, emerging markets performer. So just to sum up, I think it's time to make a move on BlackRock. We found a really good alternative. And I think that there is, what did we say, Nick? There's like a couple $100,000 of
In both plans.
It's like 1% of
yeah,
the plan.
211,000 maybe, something like that.
99.6 and the 457 and 96.4.
Okay.
199,483 is what it's like. So like 200,000.
Yeah.
1.5% of the total assets. I will say that as we discussed, I think there was a question of like, do we even offer this in the retirement plan? You know, I think, John, you said it, you know, we should give people the option to, you know, have an emerging markets fund, but it's not unusual for this not to be in a retirement plan, because obviously emerging market stocks are more risky, and we wouldn't want people putting a large chunk of their portfolio in this, but it does help. You know, I think it's always good to give people options as long as they're well informed.
I agree with that. Yeah, I think it's a good fund to have.
So what is the process? Well, first of all, does anybody have any questions or any issues with this change? Before we kind of move forward, on this? I think, you know, we pay John for investment advice. If he's suggesting we make this change, I think we should as a committee, but I mean, I also want to give folks, you know, the opportunity to ask him more questions. He did.
Doesn't switching to this stock mitigate some of that risk for people who are investing in these emerging stocks? So common sense wise, wouldn't it make sense to go?
Yeah, so the reason we're making the change, like John said, is because the fund we had in there is underperforming and the manager got fired. So there's a new manager in there that doesn't have a track record. So it, you know, the FI 360 report is showing not a great score right now. So I think that in itself, as a committee, we should make the change. We gave the fund, I think, enough time to see if that was like, you know, a short-term issue. And now that, you know, there's been, I think, a portfolio manager change, especially one where the person that came over, there isn't really a track record of us to see how he worked for some private, I think sovereign wealth fund or something like that. And so we have no idea, like, you know, what this person's track record was. So I think at least with, my only concern with Dodge and Cox is that the fund has only been around for 4 years. And so it doesn't have a very long-term track record, but, you know, I think the Morningstar report, as John said, Dodge and Cox is a very large asset management firm. We used to have them when I worked at the treasurer's office and the pension fund up there. And so they have been including these emerging market companies in other funds in the past. So it's not like they're not familiar with emerging market, you know, investing.
So can we just make the switch? Do we have to put this to a vote and?
You know, that's a good question. We haven't made a change ever since the start of the committee. So you know, I'm not sure if we necessarily need that. You know, it probably would be good to have a vote in the minutes. So if someone wants to make a motion to recommend John's changes, I think that would be helpful.
Yeah, I would make that motion.
Okay, is there a second?
I'll second the motion.
Second.
All in favor, say aye.
Aye.
Any
Aye.
opposed?
Aye.
Perfect. Change is done, so fantastic, yeah, and I think the only other question I have is, Daryl, what is the process?
Give
for-
participants a 30-day notice of change.
Okay,
So the timing is good because the third quarter statements will go out next week. I'll have the notice in with those,
okay,
so we could implement the change November 15th roughly.
okay,
The investment election will have to be.
Yeah.
Updated because it does list the Black Rock on it.
There was a couple other things that didn't change on there.
I,
Had a target date fund or something.
I think there was another.
And then this will just stay on your radar.
So yeah, so that should be.
Yeah.
Yep.
Okay.
good. Is there any
Oh, you're good.
paperwork I need to sign or anything that you need from us for this?
It's not beyond what I just heard.
Okay.
I have to submit the fund addition to Schwab.
Mhm.
They respond very quickly. Tell me it's available.
Okay,
Occasionally, funds will get added to a plan, and then when you go to implement, between the time if this decision's made. Then when you make the change, the fund will close, that's kind of uncomfortable, so with Schwab, you tell them up front, and they
Mhm.
hold the position, I don't think this fund is. On the verge of closing or anything, but.
And obviously the website will be all updated to reflect the new fund that. That, okay, good. Great. Okay, anything else, John, that you wanted to bring up on just the monitoring report or?
Yeah, I have a couple more points if I may.
Sure.
I'll keep them brief. I'm looking at the Vanguard short-term bond fund, that's on page 12 of 26. I'll just pause to let people get there. This fund is in the third quartile of scoring, it's on the verge of going into the fourth quartile. But it is of no concern in my mind, and I'll tell you why. First of all, it's an index short-term bond fund. Meaning that, remember that FI 360 compares like funds to like funds. So we just talked about the emerging market sector. And the difference between the best performers and the worst performers in the emerging market sector, I mean, we talked about, returns of 24% versus 8%, a difference of 16% points of return in 1 year. That's typical of the emerging markets sector, which is very volatile, and a lot of difference between the best and the worst performers. When we're talking about a short-term bond fund, the difference between the best performers and the worst performers is very, very slight. Like, we're talking less than 1% in most cases, and you'll see that even though this fund is in the 75th percentile, it's returning 6.29% positive, and the median fund return, as you see below it in the shading, is 6.37. So it's a Vanguard fund, it's an index fund, which means that it does its best to, mimic the market for short-term bond funds. And you know, what does define a variation of that, you know, 0.1% or 0.2% at any given time? That could be factors like, you know, what percentage does one fund manager allocate to government short-term bonds versus corporate short-term bonds? And in any given period, you may have, you know, slightly better return going to the corporate bonds, similarly rated the government bonds, but that's what sort of defines this difference. But overall, structurally and return-wise, there's very little difference. And I think that Vanguard fund is doing, it's actually doing what it's supposed to be doing.
John, I would argue when it comes to index funds, we shouldn't even be looking at the median, because it's comparing it to active managers. So
Yeah.
we should just compare it to the benchmark, and it's closer on the benchmark
Yeah,
than it is. So
fair enough.
that's why in the real estate fund, I, you know, wasn't super concerned with that.
Yeah.
It's an index fund, as long as it's tracking the index, it's supposed to track. But
Yeah, right.
I think we're not concerned with it.
Yeah, great. The only other point, the last point I wanna make is that, is I wanna just point you to the where most of the money is and how it's doing. So most of the money in the plan, up to 60% of the money in the plan is in the target date funds, the American funds, target date funds. And these funds are doing great. So if you look on page 9 of 26. If you look about halfway down that page, you'll see the allocation target date funds under, you know, with each date represented, 2000, 2010, 2015, 2020. Those, by the way, are in retirement, if anybody is in those funds, and I don't think they are, but that just is defining how deep one is into retirement. So it's a question of allocating stocks versus bonds. My point, though, is bringing this up is to show you how these target date funds are performing relative to the median on each of these yearly interval, 5-year or 10-year intervals. So if you look at the 2010 fund, the 1-year return is 12.1% versus a median of 8.75%, big outperformance. The same is true for the 2015 fund and the 2020 fund. And you can just kind of eyeball on the next page and the page after that, how the American funds, target date funds are returning on a 1-year basis versus the median. And you can see, and get an idea that the plan has done really, really well over the past year, as most of the money in the plan is dedicated to these American funds, target date funds. I believe that
It's number one.
Yeah,
For the 10 years, yeah, so I mean, this has been a great fund, choice for folks.
oh yeah, you can see the number, it's ranking, and thanks Nick for that reminder. The ranking right under the 1-year return, there is the ranking of the mutual funds. And you can, of the ranking of this fund against the peer group, and you can see the number of funds against which it is ranked. Under that first shaded line at each year interval where it says number of peers. So,
Number 2 out of 96 late.
yeah. Yeah, for the 2040, it's number 1 out of 194 linked funds, so the American funds is killing it.
Yeah.
And Nick, I will say that you are the guy who said we should keep this as opposed to going to Vanguard. Now, the Vanguard funds are also, the American Vanguard Target Date Fund are doing really well as well, but that was your esteemed leader.
I want to commission them.
Recommending that we keep the American funds.
Well, I think that's good. That's where all the money is. So I think, you know, those are the funds that we should be monitoring the closest and obviously it's, Vanguard's a cheaper fund. But if the returns are better,
Yeah.
you know, paying higher fees and these are all net of fee return.
Correct.
So,
Yep.
I think
So
that's
this-
good.
So American funds, they don't close the fund when you go by the target date. Some families have a retirement.
They have an in retirement fund, yeah,
These guys just keep the 2010 fund rolling,
yeah,
and if
And it could be, I haven't looked at what the allocation is, but it could be the same result, it could be that anything's past date. Gets to the same kind of allocation,
Oh,
but I don't know.
So Daryl, do a lot of folks that are in retirement leave, I don't know if you know this, like you can leave your, like if I retired tomorrow, I could leave my assets in the retirement plan and just keep my funds invested, correct?
if your balance is more than $7,000, you have to consent to a distribution.
Okay,
It really varies.
yeah,
I
but
have
most
some
people
plan-
roll it out and go to, you know,
Yeah,
their own advisor.
well, not most, I'd say it's probably 50-50 maybe.
Okay,
A lot of plans, think retirees leave the money in there
and is
for
there?
some period of time after retirement.
Is there any cost to the plan for allowing people to do that?
Well, for record keeping, we charge $25 a participant per year, so
Yeah.
yeah, drives that cost up.
Which is paid more by the retirees likely because they have more, a higher balance.
Yeah,
Yeah,
prorated across, but it doesn't. It doesn't increase Schwab's fees, they're charging. 2.5 basis points for custody.
Mhm.
And. It doesn't, you charge a flat fee, so it doesn't increase your fees to have. People leave their money in the plan,
No, I think that gets spread across the participants,
yeah.
yeah.
so it's actually better to have more.
Oh, okay, yeah. Just curious. Okay, if there's nothing else on the report, I did just put another item in here. It is just a discussion and some of this is probably not even within the committee's purview, so you'll let me know if I'm bringing stuff up that we don't need to really talk about, but I did want to just put something in there on the rural transfer. Cause retirement is gonna be something we'll have to think about and, seeing that we have Daryl here and John, I think they're gonna be a big part of helping folks understand this change, and the nice thing is John is actually the investment advisor for RCT, so he knows their plan quite well. And I think there'll be a question of, are folks able, if they want to just, port their retirement balances over to RCT or TBT when the transfer happens. So we'll just want to confirm that. I'm not saying we have to figure that out today, but
Yeah,
Just
that'll be,
consider.
both are qualified plans, so they'll be able to enroll.
okay. Let's,
So will the employees have to do the moving?
Yes,
Okay.
So the employees,
it's gonna be by individual.
so they'll have to do it in essence, the rollover.
Yeah, it'll be in the form of a rollover, yes.
And are you aware that RCT may be going as early as January 1?
I think I learned that yesterday.
Okay,
Yes, I am.
okay. TBT is not till like July 1st. So St. Albans will be moving as quickly as January.
Yeah, so there's the effective date is not the deadline that people have to move
Okay.
their assets, they can move it at any
So
time.
they can keep it there for a period of time, but they will have to move it over to, no.
Not necessarily, it's the
We
same,
could leave it here.
yeah, it's the same theme that we just talked
Okay,
about
so
as like a
it's-
terminated employee, yeah, yeah.
yeah, so one question is like, what communication should we
Right.
start?
Yeah,
Sending out to folks to let them know they have the option, what they need to do, the things they need to think about.
And if I may, Chris, are you getting questions about what people want to do with their retirements? Oh,
You're
you're
on-
mute.
You're on mute, Chris. I
Yeah,
wonder if I can
we're-
unmute him here.
No. Nobody said anything about it yet. Can you hear
Okay.
me?
Yeah,
But sending something out would be excellent. for
okay,
me.
We could do a distribution packet for some too, like maybe the 4-quarter statements,
okay,
they have the form in front of them, they might.
yeah. That may,
Be more inclined to act on it.
that may be helpful.
How many people are we talking?
What is there, 20, maybe under 20 people
Yeah,
in St.
Around
Albans?
that, say,
And some of them are part-time, so they may not even be a part of the retirement plan.
yeah, and we've started providing both RCT and TBT a list of those folks and do they participate in the plan, what they provide for a match and, all that, they've got all that data. One question I had, John, is for on the TBT side, and we have more time to figure this out, but they have a 403B plan structure. So I didn't know if that complicated anything with us in terms of, can they port a 457 or 401A into a 403B?
I think they
Yeah.
probably have to do 2 distribution forms, right? One for each plant, one for each,
Coming out of these.
Yes.
Yeah, and they would have to check that plan document. See if
Okay,
it allows rollovers
okay.
from other types of plans. It may not.
Hmm,
We might at some point need to get with TBT and their people as well and just figure this out. What's the best communication to staff? So I could set that up and we could maybe just have a meeting. Figure it
Sure.
out.
What do you wanna do with vesting on the?
So that was gonna be, that was the next thing on my list. So the other issue is we could have, folks who, to no fault of their own, are not vested yet. And, I think the plan documents are pretty clear on vesting. And so my question was, if we as a company management said, we want to give people this money and not make them lose it as a result of the transfer, because that's not their fault. Could we do that, or do we need to change the plan documents to do that? Darryl?
Yeah, it would be an amendment, and I'm not sure exactly how we would write that. If more than 20% of the workforce is leaving because of this transaction, yeah, IRS would consider that a partial plan termination. And in the event of partial plan termination, you're pretty much required to fully vest the people that are impacted. But
Okay.
you're only doing 20 out of 150 people, so
Yeah.
you're well below 20%. I think you could still make an elective change to fully vest them,
Okay.
the people that have less than 3 years of service.
Is that more than 20 people in totality?
Oh, in totality it is, yeah, so it'll be much more than that. It's just, as of January, St. Albans will be going, and that's a much smaller percentage of the population. But as of July, it'll be all of rural, so then that would be all of Berlin, and so that's a much
That's
greater,
additional
yeah.
40-ish
Oh.
actually people, so we're, out of total, it's like 60 out of
90,
Then you're over
190,
20%.
but some of those are part-time, so.
Yeah.
You don't really have any choice in the matter, then I would say.
Okay, well, that's good, cause I would assume the Clayton's gonna wanna
Yeah,
give that to him anyway. so,
Absolutely.
So
that will require an amendment change to our plan.
That's like with me, I
Yeah, but that
partial
20%.
plan renewals is the way around. Already.
Okay.
So I think we're good on that, but.
Yeah.
Will you double check
Yeah,
for us then?
Not all of them.
Okay,
And just to go back, you'll prepare the distribution packets for the St. Albans location?
I'll need a list of names. but
Okay.
Yeah,
I can get you. Do you wanna, I'm sorry, a list of anyone participating or, right? Or anyone there, because I don't know, like, maybe someone has closed their account. or-
yeah,
I mean,
why
not
don't
me.
you give me everybody and then
Okay.
I can export against my database.
Okay,
And do the forms for anybody that has a balance.
okay. I will do that.
Another thing I had on my list was, just, so when this committee. Before I got here, there wasn't a retirement committee, so we created one, and the board approved a sort of charter or standing committee policy. That policy includes the rural side, so we'll have to redo that policy and have the board approve an amendment to it. I think we should take that opportunity to determine if we want to make any changes to this committee. Meaning, do we want to meet semi-annually instead? Quarterly might be a little overkill. What other item did I have? So really just. And whether this needs to really be a public meeting, I think is the other question. I know Clayton brought that up to me. I think it would be easier. We necessarily have to have minutes or post agendas or things like that. So those are gonna be some recommendations I'm probably gonna be making to the board. I mean, I think we should still have a retirement committee, but I just don't think it needs to be a public meeting, and I don't think, I think maybe meeting semi-annually would be easier on folks. So, but if anybody has any,
My only concern about the semi-annual meeting is just like the BlackRock instance, like if there's a
Yeah.
fund that we've been watching, but now we're gonna take that much longer to watch it, how is that
Yeah.
going to affect?
I'm fine with meeting quarterly, I just wanna be sensitive to other
Yeah.
folks, so if folks,
That would make-
I would
yeah,
like to keep
sure.
it quarterly, to be quite honest, I think it's helpful for us, and I think it's, allows us to better manage the plan, as you said, you know, a lot can happen in 3 months, so, I have
If
no
you
problem.
extend that to 6 months, that's even longer, and then by the time you take action, you're probably a year later.
Yes, yeah, and honestly, when I was at the state, and obviously we're talking much greater amount of money, much greater amount of funds, but we met monthly. So I think I'm happy to keep it quarterly, but if folks have different feelings about that, you know, please speak up, and I would like to move it away from being a public meeting, I think it's just less overhead that way.
I agree,
So,
I think it should be public. You don't need another avenue for Kim to move it.
I'll say also, Stephanie, to your point, relatedly. Not only would there be greater lag for us to be. Discussing and taking action, but. I mean, I was joking about the real estate fund, but we're all on the same page, it's a familiarity with how we have the meetings, so we're able to jump right in. And like today, for example, we're able to really jump right in and make efficiently a decision about the BlackRock. Because we've been meeting, and if we hadn't been, then there would probably be a lot of discussion. And about, you know, getting everybody comfortable with kind of the wisdom of the move. And I think that like we all develop. This sense of understanding with the quarterly that we were able to kind of flow, and it's actually more efficient,
sure.
ironically.
Sure,
I
I agree. So yeah, I'll be working on that once the rural side goes away. So that's not anything that's happening immediately. The only other thing I would have, and this is more for, you know, Daryl and you, it's just future agenda topics. Should we be looking at another fee study? Should we, you know, is there any other items that we can bring before the committee that we need to take care of, you know, over the next couple of months? So you don't have to provide that to me now, but I think it would be helpful and just add some variety to the agenda, beyond just, you know, going over the funds. So yeah, and if anybody else has any items that, you know, they'd like us to revisit, I think we'll probably keep this rural transfer one on there just to keep touching base on that. Because that's gonna be a big lift, especially for you and John. I mean, there's gonna be a lot of people that are gonna need some help and
Yep.
are gonna be reaching out, so. If anything, I just wanted to give you a heads up that
Yeah.
that's coming.
Good.
In the short term, so.
January is a slow month.
Okay.
For who?
So, okay, well, if there's nothing else, I think that's all I had. Does anybody else have anything they'd like to talk about?
I just wanted to follow up with Daryl, the login instructions, do you have a chance yet to do anything, you know, like what I could give to a new hire?
Yes, I gotta get that to you.
Yeah, I get bombarded with that, and then what happens is then they can't get into the system, and then I have to forward them back to you,
Yeah,
so. I'm happy to take a stab at redoing it, but I would need you to make sure I'm using the right website and,
yeah,
okay.
but I gotta redo the enrollment form, so.
So you could look at the login instructions, so we
Yeah.
can get something for new hires, that would be great.
Chris and Austin, sorry, I want to make sure you folks have time to ask any questions or make any comments, so, do you have anything to add, either of you?
No, we're good with, Stephanie sending a letter out here, telling everybody.
Yeah.
When something's gonna happen, if you know the date.
He wants a.
Yeah.
About what's gonna happen.
Yeah, I think that'll be coming from Daryl in the short term.
Oh, you mean the blackout notice for the fund
No,
change?
the distribution packet for St. Albans.
Yeah, yeah. We'll figure it out, Chris. There'll be communications going out with folks.
All right,
Yeah.
that's about it.
Austin, do you have anything to add, or you all set? Great.
No, just tried to jump in earlier and say, but I'll back it up. I think Stephanie's right on the quarterly and support staying quarterly.
Great, sounds good. All right, everyone, that's it. Thanks for coming.
Thank you,
Thank
everyone.
you.
See you in a couple months. Bye.
See you later.